What's up YouTube, it's Louis here. I hope you're all well. We're looking at Quant today on the daily time frame and just taking another look at this double bottom that broke out over here on the Saturday the 14th, and since the breakout we've currently pumped about 13.5%. What I want to bring your attention to is that we've actually rejected with yesterday's candle, the daily candle close, the 050 fib. Remember, this is the golden pocket over here. It's a little bit different to the other quant chart, and the other quant chart is very interesting. I will bring your attention to it very soon. But yeah, the difference between the quant KuCoin chart and the other one is this wick down here. So this is the wick we're getting on most exchanges. It only goes down to 94, but we've got another chart that actually shows it going down to the 80s, I believe. I think the high 80s. And in yesterday's pump, it actually went a lot higher. I think it went towards the 618. Now, since the bottom over here, we were warning everyone that we can come up all the way. Since down here, we've been saying we can come up all the way to 190. Because it's the 786 fib. Why do we say this? Because if you've been following the channel ever since we've been doing the 15-minute time frame videos, you'd have seen a lot of times the fibs pushing down to here, coming to the 786 fib, and it can still continue lower like this. So this is why since November I've been warning you of this potential scenario. But of course, with anything, when you let me show you. So we're holding this as support. We've dropped down. If you're coming back up into it, again, we should expect it to be resistance, of course. So from this point, we see this as a low. We see this as a lower high. This high over here is way lower than that. So this is a downtrend. We should expect a lower low. Boom, lower low. Now you're coming back into this old support now as resistance. Okay, from here, we should expect a lower low. So that is the expectation. From this point, we expect a lower low until proven otherwise. So if in any point in time we're putting in a higher low, then we need to now do one thing and take out this high. If we take out this high, then we're forming a double bottom, and we're taking out this high, and that would be, if we go to the left, as we're climbing back up here, there'd be dips, and so there'd be something here, resistance. As you come up, you fall back down, you break above, hold it support, continue up, fall back down, lower high, break low. So this was once resistance, support, support, break below, resistance. So you should make a lower low. And then, of course, this is the expectation. You've just changed this uptrend to a downtrend. If at any point in time you put in a higher low, now if you want to flip this trend, you need to take out this right shoulder, essentially. Let me show you now on the quant chart. But do you understand that? The expectation is from here, you flip this support into resistance, we go lower. If you show otherwise, where we do not lose this, and we'll go into that, that was $100. If we're not losing $100, we're not continuing lower. So that's all explained without prices, without candlesticks. So it's not confusing, just using lines, just so you understand higher highs, higher lows. And so here we go. So we saw this $100 level. We were calling that if we're below this over here, 134, because on the other quant chart, we had that as our bear market level. Do you remember? We changed it in the last video from 150 to 160, but beforehand it was down here from this wick over here, 134, to this, obviously where we found support to head to $400+, had this over 100% bounce, massive dumps from this area, pumps in towards it, dumps from it. So this was our area. Our area of interest, but we see we have a little wick over there, and after taking this out and us being currently below that but currently above this, I can then just move this over there, saying 150 is still resistance and 160, just moving the box a little bit. But yeah, keeping it over there, we can see the right shoulder was here. As long as we're below this red box, there's still a chance we do head lower. This is that other quant chart that has a wick down to $86. You can see it's running into that large golden pocket right here, the 786 fib being 188. So that's why we were saying since this bottom over here that we can still pump to 190 and still continue lower. But yeah, of course, if we're seeing a higher low, just take out that 190 and then we are actually going higher, something like this. So if you're pumping up to here, there's still the risk we continue lower because it is the 786 fib. Of course, getting there anyway is bullish because you're pushing through the golden pocket, but there is that risk that this still happens. And then along the way down, you're meant to put in a lower low, but if you do show a higher low somewhere here, like on the previous resistance, which was the previous head and shoulders, left shoulder, right shoulder. We just didn't lose the close below the neckline and continue. We put in that double bottom, which is crazy because I've been getting abuse, but I gave you this double bottom. I gave you this. I was saying from here, we can go to 190, still go down. If we're showing a higher low, we'll continue up. I also said here, we need to wait for $100 to be lost to go to 80. Only when 83 is lost, we're going to 50. But yeah, I've been getting crazy abuse, guys. I don't know why, because again, I don't need to make any videos for you guys. It's all free. It's all out of the kindness of my heart. I'm just trying to help as many people as possible learn free skills. Because again, I'm not charging you anything unless you want me to sit down with you and spend time with you until you get it. Then of course I'm going to charge you, taking time out of my life, my personal enjoyment time. That's the whole point. I'm doing this. So I have free time, so I don't have to, of course. But again, I want to help as many people as possible, and we're doing it all for free in this amazing community. And yeah, there's of course more good than bad. But yeah, it's just annoying waking up and just seeing constant abuse, even though since November down here, I've been saying we can come up as high as 190 and still head lower. So there's always going to be that risk. It's just, yeah, we did not lose 100. So we didn't validate the head and shoulders. And so we didn't go down to 83. And so we didn't lose 83 to head down to 50. But do you understand, when you lose the head and shoulders neckline, you do this. You have to say, okay, now I've lost the neckline, we're going to this target. But we, of course, understand it's not as simple as we're going in a straight line down to $40. There's supports absolutely fucking everywhere. We were saying that we don't even want to use this uptrending line. We were saying, let's wait for a close below 100. I was actually explaining to you, we want to use horizontal supports rather than uptrending. I've told you guys for over a year, I don't like using uptrends and downtrends. I only use them for patterns. And even with patterns, I tend to rather use the horizontal. That is why this green box here, that's why this green box is here. Because back here, it was the same situation. I gave you two necklines. I said losing this is a signal we come down to here. It's not a guarantee we are going lower. Wait for a close below 150. Once we lose 150, we're going to 70. It's literally, and I said to you guys, it's the same over here. When you lose this, you're going back to here. When you lose this, you're going down to there. That's the only way you get to your target. You could find support here and so on. So we didn't lose 100. And so we're going up to the range high, which is 134. Looking to the left, it's the left shoulder. If you want the potential scenario where we keep this potential right shoulder from happening, then you cannot close above this or this. The reason you can't close above this is because of the left shoulder. So basically you can't close above this. This was also setting up the small ascending triangle, which I gave you, and I also gave you the double bottom, and then it broke above 134, and that invalidates the head and shoulders. But you can still go up all the way to the golden pocket and still come down. You can go up all the way to the 786 and still come down. It's just we are waiting to see if a higher low will be formed, and if a higher low will be formed, I'll tell you guys, high low has been formed, and then we are actually going to continue up past 190 back to our next resistance between, of course, 230. That's the 1 fib level, but it's not just the horizontal here. Can you see we've gone up trending one? And I've been telling you guys ever since losing it that we need to reclaim it. Up as we were coming up here, I was saying we actually need to get above this to flip it bullish. As we came up over here, I said we need to get above this to flip it bullish, and this is why, because of the rejection over here, I told all of you to sell and to rebuy down here at 120. And then once we lost 120, I was like, guys, this is really not good, because you're losing the 200 daily EMA. I'm not just chatting out my asshole, guys. I'm telling you completely. I'm explaining everything so effing clear. This is why it's tough to wake up to the abuse. But thank you guys so much for tuning in. But yeah, again, the 200 daily EMA was lost. We were flipping everything into resistance with the bearish cross. We were trapped under the head and shoulders. So I was saying, wait for a loss of 100. You can see, did we lose 100? No. And so that formed this double bottom, which I gave you on the channel completely for free. We took the trade together on the channel completely for free, and then we came back up to the range high. It's not expected to take this out because again, this is resistance, this is support. We're trapped between resistance, we're trapped between support. We're meant to bounce in between, and then we just took it out completely, validating that larger double bottom with a patterns target up high until about 160. We do have one going to 190. However, the other chart here is saying 177. This is the chart that hasn't got such a large wick down here. Okay, but yeah, going back to this one again, we need to be very careful once we get towards the 786, and we're already seeing on the daily time frame on the different chart that we're getting harsh wick rejection all the way up at 162. This is interesting. What's at 160 on the other chart? Let's go to the other Bitcoin chart, the regular one, the one that everyone uses. We've got that wick over there, 160. And we just saw that pump on the other chart, 162, and we left a wick over there. So rejecting basically this area. So that's why we've drawn this red box. Make sure you get it in. But again, these videos are just as a purpose for you to understand my thought process. None of it is financial advice. You should know that anyway. It's so obvious that I'm telling you guys both scenarios. We just need to wait for the validation points. So here, validating the bullish, here, validating the bearish. So basically, okay, so if this is the validation of the bullish point, that's invalidation of the bearish. And if 100 is the validation of the bearish, then that is invalidation of the bullish. So simple. I don't know how people are getting it confused. But if you want to learn it, I'm more than happy to sit down with you. Just private message me on my Twitter. We can get you started as soon as possible if you have the time to do so. If you don't have the time to do so, you can just simply buy the course, do it in your own time. You have access to my chat. Everyone's helping each other in the chat. There's over 60 people absolutely waffling, helping each other out every single day. It's a great community. Thank you guys so much for tuning in. Hope it was crystal clear for you guys. Thank you so much for the support. And yeah, let's kill this market. But again, let's not get manipulated. Let's look at it both ways. And then, of course, you go ahead and go and do your own analysis and then come to your own conclusions. Thank you guys.